Hey everybody, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics. Wanted to come to you with a little midweek update and share some thoughts that are on my mind here on a Wednesday morning. Biggest development over the past couple of days, in addition to our shift back to wanting to redeploy capital, especially in the growth areas of the market, is a breakout of consolidation for the US dollar, looking at the dollar index or UUP, the ETF that tracks the dollar index. We can see that after a steady decline from the March highs, that index and that ETF went sideways for much of August and really until recently much of September as well. Generally speaking, that coincided with our bullish view on an inflation theme, and in particular becoming more bullish on areas like materials, which we did in early July, and areas like industrials, which we did about 5.5 weeks ago. However, when the facts change, we look to adjust our views, and something that I wrote in my note this morning was the fact that the dollar is strengthening, and should that continue to play out, we would have to revisit our view on the inflation theme, and in particular sectors like materials and industrials. So I was doing some work here this morning and just looking at the correlation of the different S&P 500 sectors to the dollar index, and I was looking at 6-month correlations, and interestingly, what I intuitively thought pans out as the most negatively correlated sector of the market is materials when looked at for a correlation against the US dollar. So dollar strengthening is a negative for the materials sector, and we can think about why that makes sense, right? Materials sector leverage to commodities. Commodities are priced in US dollars globally, so a strengthening US dollar weighs on commodities. Interestingly, the least negatively correlated sector of the market to the US dollar is technology. Ticker symbol XLK is the ETF, obviously, that tracks technology, but there are many ways to gain technology exposure. So we kind of roll that up with our thoughts from yesterday, where we talked about wanting to favor the growth theme again as the S&P 500 held 325 or 3250 for the index, 325 for the ETF. We started looking at the semiconductors, which are exhibiting signs of relative strength this morning in my note. We did the same exercise on healthcare. The ETF that I used in my note this morning was IGV. That's specifically a software industry ETF to take a look at. We actually highlighted Adobe in our note as our stock of the day. So this is something that's on my mind. We were all over the inflation theme, and now we want to sit back and take notice of what's happening, potential shifts. Now, a lot of people might come back and say, well, yes, the dollar is strengthening and the dollar index is predominantly the euro, which is breaking down. Obviously, I thought about that, and what I did was drill down on the specific commodity ETFs, because they were a big part of my view on the inflation trade. When we first started thinking about becoming bullish there, we were looking at commodity ETFs such as the Aussie dollar, and New Zealand dollar and the Canadian dollar, and those are all starting to weaken against the US dollar as well. So it's a relatively new development that we're watching. I wanted to share my thoughts there. Should the dollar continue to strengthen, it would start to deflate the inflation trade that we've been talking about for the past couple of months, and that's largely played out if we look at how well the materials have done, and more recently how well the industrials have done, and how well some of the commodities have done. So it might come a point that it makes sense to change that view. So I'm watching the dollar closely to take my cues on one of the themes that I have been focused on. So I hope that's helpful. Hope everybody has a great Wednesday, and we'll be back to you soon.